case of the Mondays. You know, they say, like, you ever heard that? The case of the Mondays? It's like reverse. Mondays from there. What are we going to do? Let's do it. Let's go. Come on. We're going to do a million things and we're going to get it done in an hour. Fridays when I have my case of Mondays. Yeah, that's where I'm like, all right, I'll take a break. Yeah. That's it. Hey, welcome to the Closing Beat. Happy Monday, everybody. How we doing out there? I just got done watching a YouTuber guy, and it was a little bit awkward. I was watching a tutorial, and the guy's like, "So glad to have you here. Welcome to my channel." No, we don't do that here. We're financial advisors here at Jazz Wealth. We just like to talk about the markets, stats, geeky stuff. Try to teach it, right? We're one of the only advisors out there that really tries to teach it. We do that in a number of ways, of course. Our wine and wealth classes, our fin tips videos, got some good ones for you here this week. But for today, right now, our job is to talk about the stock market. How are things going here? Sleepy, right? The market had a case of the Mondays actually here today. Not much today, but hold on tight. Grab something. Hold on tight because we've got a lot coming out this week stock market-wise. Earnings are the most obvious one. We talked about that last week where you've got 23 names reporting earnings, mostly from the banks, right? So like 16 of them or so are from the banks. Here's what I showed last week. If you go to our Thursday Closing Beat show, I broke through all the banks here, their stats and how they perform right around that earnings day. They all report in the mornings. That'll kick off tomorrow, First Republic Bank. And then we really hit it hard with Goldman Sachs, JP Morgan, Progressive, the big banks that you're familiar with seeing as we go throughout the week there. So if you want a more detailed explanation, I won't do it again. Just go check that out. That was last Thursday. I'll give you some of the stats on that one. But other than that, we've got inflation numbers, we've got the jobs report, manufacturing numbers, retail sales, the earnings coming out. So the market's starting off today a little bit quiet. I'll give it a pass. You know, I say that's okay. If you look around the market, really small cap growth was the weak spot. Mid cap value stocks did okay today. Everything else, snoozer, right? Just an absolute snoozer there. As far as the other earnings coming out, the two most volatile names, I'm probably going to do a research post on this, but the two most volatile names are Cons and Lovesac. Come on, guys. That's that name, man. You're supposed to show yourself as this mature financial advisor. I'm going to help you get your dough straight, right? And yet I can't get past that. It's a furniture company. You've surely seen their commercials. Those are the two biggest, most volatile stocks on earnings. If you happen to own it, I don't know why we don't own it. Both of them, I think, are still working on making a profit. They lose money, but and they're also competitors in a way there as well. Banks will lead the way there for earnings. And like I said, go back to last Thursday's class if you want to see the details. If you're looking at the stock market off to the right, you're right. You've got just a down day, right? What are you going to do with that? The Dow down 0.16%. The S&P is basically flat. I talked in our Notes from Jazz email this week. Also, that the thumbnail that's showing right there, right now, the stock market being overvalued, I expanded on those from Jazz. So those of you that aren't clients or research members, you can check it out. But we find ourselves quite extended here on the S&P, and we started the day lower. We went positive, then at lunchtime, then back negative again, and it was basically just flat there. If we look through the S&P, being as extended as it is, I'll share a few things here with you. You've got NVIDIA, one of your bigger gainers on the day, the best performer in the S&P actually, as one of them there. We'll cover the news in a second. You got ConAgra. Nice reversal off the 200-day. Not typically one of those exciting ones, but look at what happened. It's a downtrend, gave you the higher low, and broke out. You say, well, I missed it. What am I going to do? Gave you numerous opportunities of a pullback there. So really one of those that we don't get to talk about a lot because I'm always showing you actual events. Like when things happen, we say if you have it, you're excited. If you don't have it, you wait for it to pull back. I often don't go back and talk about the pullbacks. But look, you got that ConAgra one pulling back nicely for you. That was one of your leaders as well. Second place, actually. And in third place comes Tesla, $25 gain, trying for the higher low as well. Over there. On the downside, you got Carnival Cruise pulling back. Actually, a lot of the reopening stocks did poorly today, airlines and cruise lines and things. You got Carnival down, United Airlines down on the day. They said their revenue is actually going to be a little bit lower than what was previously expected. So that one taking a hit. And you can just look around. You see American Airlines pulling back as well, some of those in there. You got Intel pulling back, and really a lot of the other semis besides NVIDIA. We'll cover the news on that in just a little bit. Also other airlines as well. The S&P, like I said, is now extremely overbought. here in the short term. We did a FinTips video today if you want to check it out, but it's up about 8.5% year to date, so most people wouldn't mind a pullback, being that we're just after the first quarter, so not a big deal there. Also, down at the bottom right, come over here, look at the volume. This is usually that's something that grabs your attention. Stock market moving higher and being extended on declining volume. What does that tell you? You've got less participants pushing the market higher. In other words, the market may be moving higher on a little bit of thin air there. But I did a class a long time ago actually for clients where I said, you know, the market moving higher on declining volume is, people thinking that's a bad thing, is actually a myth. If you look at the stats, the stock market actually gets most of its gains when volume is below average. You'd never guess it. It's just one of those things where every technical analysis school or technical analyst that you maybe teaches you or something is going to say strong stock, strong volume. That's what you want. As an example, if we look just this year, I didn't have time to put everything else together. I might make that a research post as well for you. But just this year, if you look at the performance and add them up of every day where the stock market's volume was above average, you find that the gain was actually a loss of 0.14%. So every day where the stock market was either up or down on lower volume, you still have a loss of negative 0.14%. If you look at the days where you have below average volume, a lot like recently here, and only count those days so far year to date, you've got a gain of 10.07%. In other words, if you own the market on days where the volume was above average, you're underperforming the market. If you own the market on days where the volume was below average, when a lot of people weren't participating, you're actually beating the market, right? And that trend actually continues year after year. We're going to go back like 10 years or something. I'll give you all that data because it's about time to refresh that one. Actually, so we'll take care of that for you. We'll go over to the NASDAQ. We have, there you go, back to prior highs. We were just talking about this last week here. That is going to be someone that, I don't know who that is actually. A lot of spam calls, man. Freaking spam is killing me. You got the NASDAQ almost back to highs there. Basically, it's the same thing. The semiconductors dragged you down all day, plus a few of the Chinese stocks. You got Baidu pulling back 2.5% on the day, and JD.com maybe a higher low here, a little bit weak. And that's all because of Alibaba. Alibaba paying out a massive fine for anti-competitive practices there, but stock was still higher. They shook it off, and that typically happens. We'll talk about that later as well. The NASDAQ's up 7.5% year to date. Is playing a little bit of catch up there thanks to a recovery in the big cap stocks. We didn't see that today, but thanks to that recent recovery that we've been talking about, they look good. Also, you have, oh, that's not the right symbol. You got NVIDIA. We talked about that already. You got Tesla helping out the NASDAQ as well as the biggest contributors. Apple and Intel were your biggest drags, and those drags dragged more than your biggest contributors. That's the simple way to kind of explain that there. They lost more and pulled on the market more so than the gainers did on the day. As far as the NVIDIA news there, you got they're going to be making processors. It's not new news. It's just official new news. They're going to be making processors and CPUs, for data centers, which is really Intel's space. That's kind of what they've been doing there. Totally overshadows Intel's, hey, we're going to build in Arizona. It's all going to be great. Everything is going to be good there. Still a massive shortage of semiconductors out there, which makes the semiconductor industry one of the better performing areas right now. And they had a White House meeting here today. I believe Biden was there. I saw the quote where he held up one of the wafers and said, "This is infrastructure." No, I disagree with that. They call it infrastructure because they're going to put it into the bill. They want $50 billion as a start to help pay for chip makers to hold greater supply, to hold a little reserve kind of, so there's no issues here. They're going to use the what do they call it, national defense law there. No. Semiconductors are not infrastructure, and I hate the idea that we're out there spending more money on this to support these companies. So I'm just against it, period. That's where I stand on that one, but it's no doubt that me and you are going to be paying for more semiconductors to be stored, to be made, to bring manufacturing jobs. And at one point, I think they said it was going to make like 70,000 jobs, and then later on, Biden said that this will create 1 million plus jobs. 1 million jobs. That doesn't work. I obviously never studied the semiconductor industry there, so I got to pick on them a little bit because they're going to spend a lot of our money on something that we shouldn't be spending money on there. But that's what's going on there. The top semiconductor companies, plus like Ford and I think Samsung was in there as well, met at the White House today asking for money, basically, is the summary of how that goes. All right, going over to the sector breakdown here for the day. Let us take a look. I'll pop this guy up so you can see what's going on. The moral of today's story is shown on this chart. We don't have to spend a lot of time on this one. Look up here. You got the group of spaghetti moving this way, and then down here you have 3 little strands of spaghetti moving lower. That's it. You got energy, tech, and communication services, the weakest areas. What happened last week? Those were your strong ones, right? Especially tech and communication services. So now they're starting to get weak. They were the ones that brought you higher. If we don't see them turn around, there's just nothing we can do to get the markets to move higher. So hopefully they have a better day tomorrow as we get into the thick of earnings season. If you take a look inside of energy, we'll do it real quick. Energy continues to pull back. I know a lot of you like that. I personally like that. I welcome it. I hope it gets a little bit worse. And if you're looking inside of there, it's going to be your bigger names, your ExxonMobil. I'll click on it so you can see Exxon and Chevron here. Really, Exxon is the only one that finished down on the day. Your biggest drags for the day in terms of how that goes. But you can look at all of these. They're all just pulling back. Energy is one of those areas right now where you're saying, I am interested in finding stocks that we can add, that you can buy or add more to. But you know, it's slow goings over there. And you got oil pulling back there just a little bit. That's really all I have for the sector breakdown. I'll take a quick look over here. If we can look at gold, you got a slight pullback in gold. It's kind of snoozing near lows, not a whole lot going on there. And we take a look at oil. It did finish positive, but it continues this back and forth. See, there's nothing there. You've nothing to go on. The uptrend was clean and clear. Now we're not sure what's going to happen there. So it's a bit of a wait and see moment for crude oil if you're taking a look over in that sort of space. I'll use the VIX here to show volatility just lower than ever, right? Obviously record low volatility. Nobody's scared of anything. We can move on to new highs and new lows for the day. You got 74 new highs on the day. Hey, man, look at that thing moving in the background there. That's fancy. What is it? They're like little blocks. I'm distracted by the shiny objects. Okay, so 74 new highs on the day. Just a couple I want to point out to you. Omnicom. So a lot of technical patterns here. I struggle with these because these are breakouts when the market is extended. That bothers me a little bit. But if we're looking in the S&P, you got Omnicom here. Sharp breakout, decent volume on the day. And obviously the uptrend continuing looks pretty good there. Pulte Homes is the other one, just won't quit. Pulte Homes is a recent breakout that's just starting that slow and boring uptrend. I love those. I would accept that, but it's a little bit tough to start a new position there. You hope it pulls back. PVH, you guys know what these guys do. They so it breaks out here after a higher low. This is what I like. We've talked about this numerous times, how when there's a sideways consolidation and you find yourself at the bottom of the range and it rallies up really hard to get back to the highs, you don't like that it expends all of its energy getting to highs. You want the energy to be used to break out, right? Well, let's go over here. Well, anyways, what you have is this stock moved back towards highs, took a break, right? And now is ready to go. I like that a little bit better because now you didn't waste all that energy just recovering to get all the way to those highs. So looking good there on PVH. Careful because we are getting into earnings. They'll be late earnings season, but still, you just want to be careful. Also, Prudential got a little bit of a sideways range here, looking like it's trying to break out. It did touch the new highs. That's why it made the list today, but just didn't get that momentum, and that's largely because of earnings. You're not going to see large moves in banking stocks until likely tomorrow when they start reporting, and now their competitors can respond to that. People can say, well, if these guys did well, then maybe these guys are going to do well also, and they kind of get that sympathy move there. Oh, let's go to Allstate. That's the other one there. Very similar pattern. Tried to stick with the same patterns today to show you the same thing over and over again so you can get a look of a real-world example. Very similar little breakout there as Omnicom. Series of highs, very tight consolidating move, tight consolidating uptrend. Maybe something good there. Oh, also, Merck. So Merck is now within 6% of hitting new lows. So you got Vertex, Perrigo, Merck, and is it Baxter? There's another one in there if you like. Just do a quick search. Nah, it wasn't Baxter. I'll come to you tomorrow with that one there. But let's move on to stocks in the news. Apple, these poor guys. So Apple's out there just trying to make everything they can. They're trying to make a bunch of them, sell them for as much as they charge for them. But Bloomberg tells us that they've got now issues with display shortages, which are going to hurt their iPad production numbers. So not because they're not selling, it's just they can't make them. We've got this whole sort of shortage thing going on. So that was in the news for Apple, one of the big drags on the S&P. Alibaba. So Alibaba pays $2.9 billion. I'm sorry, it was $2.9 billion for anti-competitive practices. They pay it to the Chinese government. It's a big fine. Why is the stock higher? Because this has been hanging over their head for, I believe, 13, 14 months now. So now we can put this all behind us and say, okay, it's $2.9 billion. Let's assume we take that out. How's the company look after that? They're going to be just fine. The stock's moving higher by almost 10% on the day. Credit Suisse. I'll use CS to take a look at this one here today. Barron's said over the weekend, if you're not familiar, Barron's does some stuff over the weekend, very specific about what they think in their analysis and things. They said that the stock likely has further to fall, but as it does fall, becomes attractive. So we're about 1070 right now. They think it has further to go, maybe closer to $10 or just under $10, and then they like it at that point. So that's them. Uber. There you go. Uber says their bookings are off the charts, man. They're off the charts, and I can attest to this. I tried their service where you have something delivered. I had an Uber driver come to the studio, pick up a gift for a friend's birthday, take it to their house, and I think it took like 25 minutes just to get somebody to accept the ride. I gave up. I figured it wasn't going to happen, and then it said, oh, your Uber driver's like 9 minutes away. So they're busy here, and it's kind of a populated area. So that's the case there for them. Bookings are at highs. They want to add a ton of new drivers. And to do that, they're also going to be selling $100 million worth of shares. So there you go. It was like $1.5 million or something shares that they're going to be selling off there to the stock market. So they're looking for you guys to get in there and buy it. Okay, you also got Signet. Remember, they just bought Rockbox, but Signet says they think that their overall earnings and revenue outlook is going to be higher than what they previously expected. Stock hits new highs on that news. They said that they're able to charge more for their product now, and people are spending their stimulus money there, so they're able to get a few more dollars for some of that jewelry, and it's good for them. That's good if you own it, and of course, you want to see it move higher. Good, strong stock at the moment. You might have noticed the big move in Nuance today. Nuon is the ticker symbol there. Microsoft talking to buy them for $56. The talks are ongoing. It's not official just yet. That'd be about $16 billion if you think that's a good deal or not. And Taiwan Semiconductors now says, we're going to spend $30 to $31 billion versus the $25 to $28 billion total capex for the year. And that's because of the shortage, right? It makes sense. If you have this demand and you just don't have the product, go get more product, make more product. For them. So Taiwan Semiconductor is the biggest holder in the SMH. They're going to be spending more money. Who knows? Maybe some of that comes from the $50 billion. They were at the meeting today at the White House. They had their hand out looking for money for infrastructure. We'll see where you guys stand on that. What do you think? Right? You think semiconductors? I mean, I get it. You know, if we want the stuff, we want the cars and all that stuff, and we're going to make them here in the States, then yeah, I see the argument there, but I'm just not for it. We don't need to spend money on that. Infrastructure is not a product. Infrastructure is a road. It is a bridge to get me to work. You know what I mean? It's like things that the government should be spending money on to have a nice, to have our infrastructure work. It's possibly rails if you disagree or agree with that, but it's not a chip so that I can have a nicer phone or a self-driving car. I'm not there yet. I could be convinced. You let me know. I don't like the government spending money because they're going to spend that money and then they're just going to tax us, which makes my job harder. So, yeah, there you go. I don't care if it's Republican or Democrat. Doesn't matter. Just quit spending money. Let's just all hang on. Let's not spend any money. Okay, I'll take your questions here, see if I can help you out while the stream catches up and you guys agree or disagree with me. We got, of course, the earnings. I shared that with you. Fastenal is also on the list to be reporting earnings as well. I'll likely take a sheet of all the companies reporting this week, share the stats with you, put that in the research site. If you're interested in the research site, it's $13 a month. Come join us. You control the membership. The goal is to just teach more detailed concepts in there, share that data with you, share the research that we're doing so that you have maybe the advantage to go do some of this on your own and say, well, now I'm going to make trading decisions and investment decisions based on that. So maybe you'll check that out if you would. Helps us keep building all the good stuff here. Cool. Oh, you got some Alibaba fans in there. I love it. Modern monetary policy. I think it's about time we change that name. Yeah, I think it's just out of control at this point. But I don't know. I think, there's things that we can all get together on. Like, I always argue this one. The TV stations should not be allowed to all go to commercial break at the same time. If we're making up weird random laws, let's put that one in there. I hate it when I'm trying to watch TV and everybody decides they're going to commercial at the same time. There's nothing to watch, right? You should not be allowed to do that. So that's one of mine. I'm just saying. Just throw it out there. Yeah. Did I get hit by lightning? I didn't get hit by lightning. No, thank goodness. Read a cool story about that, though. Yeah. Semiconductors are needed for the things that build infrastructure. Okay, we're paying for infrastructure already by financing those companies that then come and build, the tractors or build the supplies that then make the infrastructure. Let them make the profit. You want that? Go do it. We're already spending money on infrastructure. We don't need to go financing companies to make more chips. My opinion. I like it. I think we're going to see more inflation this week. So what was it? Was it Jerome Powell on 60 Minutes or something? Is that normal, by the way? That struck me as odd. I know he was on there one time before, but he had some comments on that. And of course, they have to keep the argument that, look, if inflation does start to get out of control, we've got it covered. They're never going to say we're concerned about it and, oh my God, we have to make these decisions. But there's no doubt that you have to anticipate seeing inflation. How can you bet otherwise? I just don't see it. Yeah. The TV should have the same audio levels. We basically solved that before, right? We didn't need a law for that. I'm serious about the commercial thing, though. Radio stations, too, while you're at it. Yeah, I listen to the radio. I don't watch regular TV, not cable. Now I'm watching the free stuff, right? But even those little boogers, they all commercial at the same time. I'm just saying it should be a law that if you're something on a TV, no commercials all at the same time. He's on a roll, man. Don't give me the weekend to sit around and recharge, man. Yeah. Got a couple people with me there. Oh, and I think we'd throw in one with the CNBC people, because I noticed today they go to commercial and then they come back and they'll say, like, this stock is up 20% this year to date. After the break, we'll tell you which one it is. And then they go back to commercial. Stop that too. Stop. Just get it out. Cancel good stuff. I love it. Yeah, it's a tough one out there, but that's okay. It's Monday. We're getting started, and not a lot. The moral of today's story is not a lot going on. It will change. This is a very busy week for economic numbers and, of course, earnings. So we're going to have a lot to cover. We will, of course, cover it as things get started. And then if you think this week's busy, we really get ramped up next week for earnings. Just a downpour of earnings there. So hope you enjoyed today. I will wrap it up now that I got you guys fired up. Let you do your thing, and thanks for the support. Thanks for watching us here. We're trying to play with some things, make things a little bit different, or better, I should say, and appreciate you hanging out. Enjoy your day.